Buckle up, everyone. You are strapped in and ready for Insurance Hour with me, your host, Karl Susman, informing, educating, and entertaining one policy at a time. This is Insurance Hour. Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here with me today. We are going to talk about all things insurance related. I know your absolute favorite topic and mine. We're going to learn about insurance. We're going to learn the things we need to know. We're going to answer a ton of questions that have been sent in by you. And I appreciate you taking the time to do that. Meanwhile, the phone lines are open so we can take more of your questions live. Give us a call at 559-656-0317. You can call that number or text it, or you can send an email to questions@insurancehour.com. And we will get back to you as soon as we can. Remember to let me know if you're not speaking to somebody, if you'd like your entire question read, or if you want me to summarize it. Do you want me to call you out by name? What do you want me to do? Just let me know, all right? Let's get right to the emails and see what we have. Remember, I have not pre-screened any of these emails or voicemails. I'm going to be reading them and answering them off the cuff. I find it's better than for me to try and upfront do research and try and mind it over more than it should be. So I'll give you the best that I can right now. Let's get right to it. This first question is from Erica in Boise. And she says that, is it usually better to have a higher deductible on my homeowner's insurance if I want to keep my monthly premium low? Erica, thanks for the question. Deductibles are a funny thing because what's good for one person is not good for another person, right? So you might be somebody that's looking to save money. You've already checked with your insurance agent or broker and you've gone through the process and you find that there really just is nothing else on your policy that you can reduce or change or manipulate in any way to save money. So you go right to your deductible as being an option to do that. Now, some may argue that it's better to start with the deductible versus cutting coverage. I'm usually one of those people. I like to see somebody potentially take on more exposure in the form of a deductible rather than eliminating coverage altogether or lowering limits, which is even worse. So to answer your question in general terms, while a higher deductible is definitely going to save you some money, it's not for everybody because you need to be in a position where you can absorb that amount of money out of pocket before your insurance carrier kicks in, right? There's no point in insuring something, having a deductible where you can't afford to fill that deductible because then you're not going to be in a place to get your coverage placed and paid for anyway. So deductibles high, good deal. I'm a fan. Just be sure that it is something that you are comfortable with in the event of a claim. Thanks again, Erica, for that emailed question. Next is from Kevin in Dallas. He says, Karl, just bought a second car for my teenage daughter. Should I list her as the primary driver on her own policy or keep her on mine? That is a great question. And it's interesting because people tend to have the idea that they can basically just decide, should I put someone on their own policy or not? But insurance policies don't work that way. In order to have, in this example, an auto insurance policy with your daughter on it, your daughter would need to have what's called an insurable interest in the car. That would usually be in the form of being the registered owner of the vehicle. Or perhaps she's leased it, in which case she might also be on the registration along with the bank, the leasing company. So you don't necessarily just have, at your own whim, the ability to decide, I think I'll just put my daughter on her own policy to save money. Another thing to keep in mind is that if your daughter is living with you, or it can arguably be said that you are supporting her financially, then even if she is on her own policy, say you put the car in her name, and even if she has her own policy and her own coverage, in the event of a claim, it could be argued, and again, I'm not an attorney, I'm just speaking from things I've seen and read in the past, it could be argued that because she's living under your roof, because you are supporting her financially, that you, at any rate, are going to be vicariously liable for the damages that she causes. So if the point is to put her on her own policy so you can have lower limits of liability, that might not actually pan out to work for you. You might end up being in a bit of a pickle. So keep in mind when you're going to be deciding about putting a driver on their own policy, remember, even though not all insurance agents, brokers, or insurance companies will ask for verification of that insurable interest, right? They're not always going to say, well, give me a copy of your vehicle registration. I have to be sure that you're the one that's insuring the car. Most people don't look to insure other people's cars, so you can see why that's not necessarily something that is looked at with a microscope right up front. Understand, in the event of a claim, if someone has to start going through and verifying information for the policy, and they find that your daughter is listed but the vehicle registration is not in her name, that could potentially cause a problem. Thanks so much for that question. Who was it? Kevin. Sorry about that. Let's get to the next question. And this is no name on this one. All right, let's just go for it. Hello, I'm in the process of refinancing my home. Does changing the mortgagee affect the terms and the cost of my homeowner's insurance? That's a terrific question. Most of us do not have the luxury of purchasing a home and not having a loan on it, meaning that we're going to take money, we're going to put money toward the house, and then we're going to get the balance that we need in order to buy the house from a bank or a lender, and we're going to pay them installments on that loan while we're living in the house. So the question is, if we change mortgagees, basically, let's say that you're with one bank and you're refinancing with another bank, is that going to change the terms of your policy? And the answer typically is no. If all you are doing is changing an interested party, and remember, a bank certainly is an interested party, right? If there's a loss on the house, that's their collateral on the money that they let you borrow. So the sheer act of changing an interested party does not normally have any impact on the terms of the policy or the price. Some companies might charge a small fee for the actual processing of changing the mortgagee, but typically you won't even see that. So I think it's safe for me to tell you that just changing a mortgagee is not going to change the policy type for sure, and it's not going to change the provisions or anything along those lines. Now, of course, I'm saying that out loud. I'm thinking, yeah, but let me give you an example. If you are adding on another mortgagee, and let's say this is a third mortgagee, now the insurance company might say, wow, they have 3 mortgages. There might be some financial problems going on here that they're looking to borrow so much money. They might look to underwrite that at renewal a little differently. So things necessary, everything comes at a potential cost, right? If you're not making any significant change, just changing banks, then wouldn't worry about it. But if you're doing something that might end up putting you in a position where the insurance company says, wow, we need to revisit this entire policy because we're a little more concerned at renewal, then yes, then it might actually be something to be aware of. Remember, that's something that would happen at renewal, not simply at the time that you're changing the mortgagee. With that, let's take our first quick break. This is Insurance Hour. I am Karl Susman, 60 seconds, and we're back with your questions. Stand by. Let's talk about earthquakes for a minute. Look, we know we live in earthquake country here in California. Powerful, devastating earthquakes have happened here before, and science says that they will happen again. They can't tell us exactly when, they can just tell us that it is going to happen. Count on it. Prepare for it. Did you know that earthquakes are not covered by your homeowner's insurance policy? You need a separate policy to give you the peace of mind that you will be able to recover without getting financially wiped out the next time we get hit with a big one. There's a great company here in California that will provide you with earthquake coverage you need at a price you can afford. That company is GeoVera. I have a policy through GeoVera. I really like how easy it is to choose from all of their great coverage options, backed by the financial strength that lets me know that they will be here for me when I need them the most. Go to getquake.com/insurance hour to learn more. That's getquake.com/insurance hour. Make sure you're ready for the day when the ground shakes again. Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here with me today. Before anything else, I want to thank our sponsor, GeoVera Insurance Company. They are sponsoring today's show. As you can imagine, being an insurance broker for many years, I can purchase my own personal earthquake insurance pretty much wherever I want. And every insurance company wants me to purchase from them so that I can tell people that I'm selling the policy to, hey, I even have the policy with this company. Well, I've actually had my insurance for my home with GeoVera long before they were a sponsor. I've actually been with them for decades. So I do find that their rates are very competitive and their product offerings as well. So take a few moments to get a quote for earthquake insurance. Just go to insurancehour.com. You'll see GeoVera as our sponsor right there. Just give them a click. You'll be able to get a quote for your home in less than 60 seconds. Literally less than 60 seconds. seconds. So thank you once again, Giovera, for your support. We are live and taking your calls and your questions about insurance. Give us a call at 559-656-0317. You can call, you can text that number, whatever you like. You can also send your questions in to questions@insurancehour.com. We'll get those. We will get them in the queue, and we'll have shows just like this, and we will read them and give you the best answer that we can. Let's dive right back in. Let's see. This is from Jared. Jared says, hi, Carl. My neighborhood has flooded twice in the past 5 years. Wow. Is a standard, he didn't say wow, I did, sorry. Is a standard home policy enough, or do I absolutely need a separate flood policy? Okay, this is a big one. Flood insurance is not a covered peril on standard homeowners insurance policies. Say it with me. Flood insurance coverage is not a standard peril on homeowners insurance policies. Now, what that means is if you have a homeowners insurance policy and there is a flood, you should not be expecting to obtain any type of coverage or money from the insurance company. Flood damage is specifically excluded from the homeowner's insurance product. So to answer your question, if you haven't figured it out yet, flood insurance is a necessity if you are looking to obtain money and have coverage in the event of a flood. So let's say it one more time. You absolutely need a separate flood policy if you want to have any type of flood coverage. You are not going to find flood damage on a standard unendorsed homeowners insurance policy. I keep wanting to make that more complicated, but I really can't. That really is just as much. That's it, start to finish. Let's go to the next one. This is from Lauren. Hi, Carl. How are you? I live near a fault line in California. How do I know if earthquake coverage is worth the extra expense? Well, Lauren, it sounds like you pretty much have the answer to this already. You're saying that you live near a fault line. Well, I would say that you are more than likely going to be in a position of having earthquakes around where you live, and significant potentially, since you are in fact near the fault line. Earthquake insurance, similar to flood insurance that we just talked about, is not something that's typically covered under a homeowner's insurance policy. So if you're looking to get coverage for earthquake insurance, you do need to purchase a separate insurance policy, like from Giovera, our sponsor. They will write a standalone, we call it earthquake insurance policy, all by itself. It's not attached to your homeowner's policy. It's with a different insurance company altogether. So is it worth the extra expense? Well, that's an easy answer. If there's an earthquake, it is. If there's not, then it's not. But since we don't know, we have to do what's going to feel right for us. And most of the time, people will say, well, what does it cost and what's the likelihood of there being an earthquake? If you're near a fault, I would say the likelihood is pretty darn high. Even if you're not near a fault, the likelihood of having damage from an earthquake is still pretty high. You'll remember the Northridge earthquake actually had pretty significant damage in West Los Angeles. Now, for those of you that are familiar with the area, the Northridge is quite far from Santa Monica. You would be able to say you would be amazed if the same fault line would travel that far. But earthquakes are funny animals, and they actually have a strange way of having the earthquake waves travel through the ground and damage areas that are not always right near the fault line exclusively. Those waves travel through the rock underground and will cause damage in relatively far away places. So as you can probably guess, I do believe in having earthquake insurance, basically, no matter where you are. Keep this in mind. If you're in an area and you think, there's no earthquakes out here, well, then the premium for an earthquake policy is going to be really, really small. And you know what that means? If you're not near a fault line, it might just mean they haven't found that fault line yet. I keep talking about the Northridge earthquake because I was very nearby when it happened, and they were not aware there was a fault line there until, guess what? That earthquake hit. Fun fact, we think we know where we are. We think we know how the risk is. But when it comes to things like earthquakes, we really do not know until there is an earthquake. And then we can look back and say, oh, look at that. There was a fault line there. Who knew? Certainly not us. All right, let's get on to the next question. No name again. Good afternoon. I'm looking to downsize and move into a smaller home. Will I save significantly on my homeowner's insurance, or is the cost mostly tied to the location? That's a great question. Homeowners insurance has a lot to do with the property, the size of the property, the area that it's in, and you. Yes, you. It has to do with you because if you're someone that has had claims in the past, then you would potentially be expecting to pay more for homeowners insurance premium than someone that has not had claims on their homeowners policy in the past. So in a vacuum, if nothing else was different, you could expect to pay less money for a smaller house because if it's the same insurance company, again, we're saying if everything else is the same, then the cost to rebuild will be smaller and your premium should be smaller. Keep in mind, when you're moving to a new location, that new location might be a higher risk for some type of peril. So that might offset the smaller house and you might end up even spending more money. It may also turn out that you're having to go with a different insurance company because remember, the insurance company you're with now might not be even offering coverage in the new location you're going to. And if they do, it might not be the most competitively priced product. So homeowners insurance, big, small house, yes, there is definitely an impact there. But when you're changing locations, don't forget, you're also talking about a smaller house, but you're talking about what age is the house? What's the construction type of the house? There are so many factors that go into what homeowners insurance costs. It's very difficult to distill it down with any accuracy and say, okay, if it's literally the exact same home, but smaller, well, if it's the exact same home, then how is it smaller? You see what I'm saying? Those factors will change. But I understand the question, and hopefully I was able to give you a little bit of a feel for what you should be expecting. But shop around, make sure you're getting a competitive price and product. Be sure you know what it is that you are getting. And I'll tell you what you're getting right now. You're going to be getting 60 seconds without listening to me. This is Insurance Hour. I'm Karl Susman. 60-second break, and when we're back with your questions, stand by.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Gray.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences.
This show is a weekly trip into the world of the Disney theme parks and resorts.
And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here with me today and talking about and learning about everything insurance related. I know it is the most exciting topic in the world. You want to know so much. You want to learn so much. I'm being just a little sarcastic. I get it. This is not everybody's favorite topic, but it is important that you have a basic understanding of insurance, of how it works, of how it's purchased, how it's sold, how it's utilized, how it's underwritten, claims, you name it. It's important. It's your money. So here we are talking about it, and the phone lines are open. You can give us a call with your question at 559-656-0317. You can call that number or text that number. You could also send your questions in by email to questions@insurancehour.com. We will answer those questions for you just like we answer the phone calls and the voicemails, all right? Here we go. Next one is from Dave in Colorado. Hey, Dave. He says he just bought a motorcycle and he wants to know how different getting insurance for his motorcycle will be different than getting coverage for his personal car. It's a good question. Different, but not very different. You're going to be looking to get similar types of coverage by name, right? You're going to be getting liability insurance, comprehensive insurance, collision insurance, things of that nature that you're familiar with. The difference is when you have a motorcycle, you're looking at a different product. You're looking at a different policy. So it's going to be a little bit different. For example, they're going to be referencing motorcycles and how many horsepower they are, things that are not necessarily mentioned or underwritten based on vehicles. We're not asking how many horsepower does your car have. They're just asking for the year, make, and model. Motorcycles can be a little bit different because the same year, make, and model might be changed and have a larger horsepower, which can impact the insurance premium and policy altogether. Also, we do find that motorcycles tend to be modified more often than single-family homes. Try that again. Tend to be modified more than vehicles do. So you will see more questions that ask a little bit more detail about the actual motorcycle itself. Have you upgraded it? Have you updated it? What type of customizations have you done? And remember, and I have to say this, the insurance carrier is not asking these questions because they're just looking for a way to charge you more money, which is what people tend to think sometimes. No, they're asking that because they want to be sure you actually do have the coverage you think you have in the event of a claim. Right? You don't want to be one of those people that has their motorcycle, spends a ton of money modifying it, never tells the insurance company, and then there's a loss, and you say, whoa, wait a minute. What do you mean you're not going to pay for all those extras? And the carrier would say, how would we know that you had all those extras? You never told us, right? So it works both ways. You want to be able to tell the carrier so that you can have the coverage, and yes, there is going to be a premium for it because you're going to be getting more coverage. You're going to be having more money paid back to you in the event of a loss. Got it? All right, let's move on. Next one, we have Nora. Hello, Nora. She says, hello there. I've heard you talk about umbrella policies before. Can you explain why I might need one if I already have high coverage limits on my auto and my home insurance? First, Nora, very impressed that you even know what an umbrella is and you realize that it does have some connection to the limits of liability on your home and your auto. Bravo. I clap for you now. Got it? Very impressed. Well, that's because, as you said, you listened to the show. You've heard me talk about it before, so good for you. Now, umbrella insurance, first, let me tell you what it's not. It is not more coverage for everything, which is sort of what it sounds like, right? It's umbrella coverage. It sounds like it goes over everything. Well, it doesn't. It goes over your liability exposure, right? Liability exposure. An umbrella policy is liability insurance. It does not give you more coverage to replace your car. It's not going to give you more coverage to replace your jewelry. It's not going to do any of those things. It's going to provide you with additional liability coverage. So in order to get an umbrella policy, the carriers will have you maintain a minimum limit, what's called underlying coverage, right? And a limit of liability that you need to have underneath the umbrella policy. Sometimes for your primary residence, it's $500,000. Sometimes it's $1 million. On your automobile insurance, it's usually $250,000 to $500,000, depending on the state and the insurance company. So in the event you're involved in a large car accident, right? Something really bad happens, then you can know that your umbrella policy is there if all of the limits of liability on your automobile policy are exhausted. Because remember, all liability is a protective barrier between you and the person that you have basically have committed negligence against, the person that has some type of a loss because of you. So if it turns out that you're involved in an automobile accident, you cause a lot of damage, you hurt people, potentially even worse, and the automobile limits are exhausted, then your umbrella policy would kick in. Similarly, if your personal liability on your property insurance, like your homeowner's policy, is exhausted as well, you would be able to have your umbrella policy kick in after that. Now, as far as when do you want to have an umbrella policy? Personally, and of course, I'm a little jaded, right? I'm an insurance broker and I see people have losses all the time. I think almost everybody should be having an umbrella policy if they own a home and they have vehicles, because that tells me in very generic terms that they do have the means to purchase things of value, a home, vehicles. That would tell me also, I would extrapolate that they probably have income of some substance. And these are things that need to be protected. And in the United States, we are a very, I almost said sue happy, and that sounds terrible, but you guys get the gist. people tend to litigate more than in a lot of countries. I remember when I was in Switzerland, I think it was, a number of years ago, and I was walking along and the sidewalk was completely uneven. It looked like someone had dropped something crazy heavy, like a bowling, basically like a bowling alley on the sidewalk. It was all broken up, and I was walking, it was dusk, and I just kind of stumbled and fell over. I didn't get hurt, but I thought to myself, wow, if this had happened somewhere in the United States, they would have had this area roped off. They would have had all these orange cones saying, danger, be careful, beware, because somebody would trip and fall there. And the first thing that they might look to do, whether they're really hurt or not, is claim they were hurt because they think they'd be able to make money out of it. It's unfortunate, but as a society, we are seeing this happen with unfortunate frequency. So, I was going to say unfortunately again. Can you tell? I think it's unfortunate. It is. So yes, umbrella, liability insurance, protection. I would suggest you look into it as soon as possible, especially again, if you are a homeowner. With that, we're going to take another quick break. When we're back, more of your questions. This is Karl Susman. You are tuned into Insurance Hour. 60 seconds, and we are right back. Stand by.
Have you been dropped by your insurance agency or seen your premiums skyrocket? Susman Insurance is here to help. We're a family-owned and operated insurance agency that's been serving our community for 2 generations. At Susman Insurance, we know how stressful it can be to find the right coverage, especially when prices go up or you're left without insurance. That's why we're committed to finding you competitive rates, whether it's for fire, home, earthquake, flood, auto insurance, you name it. We've got you covered. Give us a call or send a text to 310-820-5200 or visit us online at sussmaninsurance.com. Plus, stay updated on all things insurance by joining our text group. Just text 567-4CARL with a K. That's 567-367-5275 to get the latest updates straight to your phone. Susman Insurance, your family's insurance solution.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today. We are talking all things insurance. Things that you need to know, things you didn't know you need to know. And let me tell you, there are a lot of them. Enough that for going on 2 years, we have been talking about insurance every single week for an hour solid. And that is just for starters. Hey, we're live right now. If you want to go ahead and give us a call with your question, give us a call at 559-656-0317. You can also text that number if you like to. Also, email your questions in to questions@insurancehour.com. Before we go on, I want to make a quick point. I do the best that I can to give you the most up-to-date and accurate answer that I can. But I'm not perfect. Like everybody else, things change, and I might miss the mark sometimes. There might be something that's going on that you hear or you have heard, and I'm saying something that's, a little different. Do not be shy. If you hear something that doesn't jive with your understanding of something, if you're an insurance agent or broker or insurance company executive and you're listening and you say, hey, Karl, or hey, not with us, let me know. Nothing makes me happier than getting feedback that I can go do a little extra research on and come back and clarify for everybody, because not only do I learn something new, I get to pass that knowledge on to you, which is really the whole point, right? So again, if something doesn't make sense, let me know. No ego involved here. I want to get you the most accurate and up-to-date information that I can, and I cannot do it without your help. It's a two-way conversation. You with me? All right, let's move on to the next question. Let's see. The subject of the email says life insurance inquiry. Hey, we did an entire show on life insurance not that long ago. If you missed it, definitely go seek that one out, because I think we did a terrific job of clarifying information about life insurance. And it was not a sales show. I know. Shocking to imagine that you can get information about insurance from someone that's not trying to sell you insurance. Woo! But yes, great show. Search for it online if you want. You can find it on Apple Podcasts, Spotify, Pandora, YouTube, you name it. We're out there pretty much everywhere. Just look for Insurance Hour on life insurance or something like that, and you'll definitely find it. Anyway, let me read the question. It says, what's the difference between term life and whole life, and how do I decide which one is best for me? Wow. Talk about a short, simple question that has a very complicated answer. There is no one-size-fits-all insurance policy for life insurance especially. Arguably, there's really not one-size-fits-all for any type of an insurance policy, all right? Now, term insurance, term life insurance, and whole life insurance are very, very different types of policies. And I don't want to repeat the entire show where we did go into this in some detail, but let me just give you 2 or 3 main points to be aware of. Term insurance is a particular type of life insurance that you pay premium on, and a death benefit is paid, and it is only enforced for a fixed period of time, usually 20 or 30 years. If death occurs during that time, a payment is made. If not, nope, no coverage. You're not going to get a death benefit. Whole life insurance is a different story. Whole life insurance is designed to go on for a much longer period of time, usually your entire life. That could be age 95, age 100. It depends on the product. And you are going to be paying premium longer than you typically will in a term life insurance policy. But the caveat is that you're also going to have access to cash, because some of the premium you're paying into a whole life policy is going into a cash account for you, versus with a term policy, you're paying what's called the pure insurance cost. Now, this is an extremely oversimplified version of the differences, but those are 2 main points that you should be aware of. As far as how do you decide which is best for you, my best advice would be talk to a life insurance agent specialist, because that's their thing. They are trained to be able to sit down, talk to you about your individual circumstance, and advise you on what they think makes the most sense. Now, beware. You do not want to have I call them the one-trick ponies. If you talk to someone and they are just, you can tell from the first few seconds you're talking that they've got a particular product in mind, or they even come out and tell you straight out, oh, I've got this unbelievable product that's great for everybody. Move on. There is no such thing as a product that is great and perfect and the best for everybody. I don't care what the product is. And I'll probably get a lot of hate messages from this, but I'm going to say it again because I really believe it. There is no one size fits all with life insurance. There just is not. So find an expert, find somebody that has access to lots of different insurance companies and is comfortable with multiple products. Again, no one-trick ponies. All right, let's get on to the next question. Teen driver with 5 exclamation marks. I'm Sam and my 16-year-old just got her license. Do you have any tips for finding affordable auto insurance for new drivers? Well, Sam, my number one tip is I hope you spent your time really teaching that person how to be a safe driver. Because no matter what you do, life insurance, I'm still back on the life insurance. Auto insurance is going to have a large impact of price based on driving experience. And a new driver, like by definition, is inexperienced. So the best thing that you can do is be sure that they are well trained while they are still learning and getting their permit. And I'll go on even further to say that once they have their license, make sure they understand that doesn't all of a sudden make them the master driver. Just because they have a license, all that means is they're allowed to drive without another licensed driver in the car. It's not their get out of everything free, hey, you are now the master driver, okay? I hear this sometimes from parents. Well, my kid passed the test, so that's it. That's the end of that. I hope they do well driving. No. You still need to be the cheering squad. You still need to step up and be sure you're there offering advice, and remember that they are still an inexperienced driver. Remember, a young driver is a licensed driver and is an inexperienced driver. I'll get off my soapbox. How do you save money? Some insurance companies will offer discounts for things like good grades. So check with your insurance agent. Say, hey, my student's on the honor roll. Is there a discount for that? Some carriers will also offer a discount for students that will take good driving courses and defensive driving courses. Most of them are online, so they're pretty easy to take, right? That's the low-hanging fruit. But I think if I had to pick one, I think the largest discount you might be looking at for a new driver would be not a discount at all, but would be to find a vehicle that is not going to cost an arm and a leg to repair or replace if it's damaged, for a lot of reasons. Now, I understand you want to get your little poopsie the best of the best of the best, and you should, Just understand that if you're putting them in an expensive car, then the cost of the insurance is going to reflect that. Not always the best thing in the world to do. Even if they're a great driver, sometimes it makes sense to put them in more of a knock-around car, if I can say that loosely without getting too many people upset. Anyway, on that note, let's take another quick break. This is Insurance Hour. I am Karl Susman. 60 seconds, and we're back with your questions. Stand by.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Gray.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences.
This show is a weekly trip into the world of the Disney theme parks and resorts.
And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today and learning about insurance. These are things you need to know. I get it. Insurance is not necessarily your favorite topic. Some people darn right hate it. These are different times, and it's important that you understand at least the very basics about insurance, how it works, how to purchase it, how to file claims, how underwriting works, how you can do things to try and extend your insurance premium dollar. That's what we're here to help you do. Phone lines are open. Give us a call at 559-656-0317 or text that same number, 559-656-0317. If you're the email type, go ahead and shoot us an email to questions@insurancehour.com. And we will do as we have been doing for the majority of this program, and we will read your questions and we will answer them to the best of my ability. Let's move on. This email is from Jennifer. She says, "Hey, Karl, love your show." Okay. Ooh, yeah. Fan email. Okay, yeah. I know, that's kind of sad. Yeah, it's pretty rare that somebody actually will write in specifically and start out their email by saying they love the show. So I'm going to bask in the glory while I can. All right, let's see what Jennifer has to say. Where is it? There it is. "I'm curious about renter's insurance. Does it only protect my belongings, or am I protected if someone..." I don't understand the rest of the question. Oh, darn it. I'm sorry, Jennifer. Well, let me answer the first part of your question. Yes, renter's insurance primarily is designed to cover your personal property, which makes sense. You're moving into an apartment, you're moving into a house, you're moving somewhere with your stuff. You know, you've gone through the process, you've begged all of your friends to help you move. They've all said they're busy because, that's what friends do. But somehow you've managed to box up your stuff, get it to the new place. All of that stuff that you're bringing with you, you want to have protection for. Now, since I don't understand the second part of your question, I just want to add a few things to it. Renter's insurance, for the most part, will also cover things in addition to just the personal property. For example, they will typically provide coverage for liability insurance. We talked about that in some depth today, right? So in the event that somebody sues you, your renter's insurance policy should have liability insurance. Double check yours to be sure. And that liability insurance can help you out in the event that there's litigation or there's injury or things of that nature. So renter's insurance, very inexpensive. Lots of insurance companies that are out there offering it. And probably one of the most overlooked products, I would say, because a lot of times people think, well, I don't own the place. What do I need insurance for? Yeah, but your stuff. I mean, we know about insurance on our cell phones, right? We know we can get it either from the manufacturer or we can get it from the cell phone provider. We think about that all the time, and that's just a phone. What about the rest of your stuff? What about your computer? What about your clothing? What about all of your stuff? Reminds me, George Carlin did an amazing special. You can probably find it on YouTube. Do a search for George Carlin stuff. Oh, It was brilliant. And if you don't know who George Carlin is, definitely check online. That is one funny dude. All right. Thanks again, and thanks for the kind words. Next, we have Max in Ohio. He says, is there a big difference in premium for men versus women when it comes to life insurance? Oh, that is a phenomenal question. Well, let's peel back the onion just a little bit on this. Life insurance is going to be priced in part, we're talking generically, on the likelihood of death. All right? That's how they have to figure it out. The actuaries have to crunch all the numbers and say, okay, this is the likelihood that this person is going to die. So the first thing we would look at is, well, who statistically lives longer, men or women? That's easy. Women live longer, always have. Insert joke here, which I will pass on. So women live longer than men. So right off the bat, before we change anything, more than likely you're going to see lower prices for life insurance for women versus men, assuming all other things are the same. Now, add to that, and I'm not being sexist in the least, we're just talking about statistics and what's more likely to happen than not, what's more common than not. Men tend to engage in more risky activities than women do. And because of that, there is the potential for an early death as well. So that also contributes to the fact that life insurance for men does tend to be more expensive than life insurance for women. So to answer your question, there is a difference. Is it a big difference? Big is a pretty loaded word, right? I would say, and again, all insurance companies look at this slightly differently, right? They all have their big brains crunching numbers, figuring this out. But I would say it's a safe bet that you'll be looking at about 5 to 10% difference in price, assuming all things are the same for a man versus a woman. It might be more, it might be a little less. Some insurance policies actually have what are called gender neutral policies, where they say, you know what? We don't even ask the question. Everyone gets everyone, whether they're a man or a woman, doesn't matter. We're going to give the same rate. How do they do that, you might ask? Okay, you might not be asking it, but I would be asking it. They do it by taking the price for a man, the price for a woman, slamming them together and coming up with the average. There's no magic to it. So yes, you're going to be paying a little bit more than you should as a woman. You're going to be paying a little less than you should as a man. It's more of a sales bit than anything else. There's no other real reason that companies will do that other than it makes it a little bit easier, right, to underwrite, because that's one thing they don't have to go through and figure out and run the numbers on. And some people just like it. They don't like the question. They don't like being asked. They don't like the implications of it. There are also issues that we face where people have gender identity, and that creates other problems for the insurance companies because they have to try and work with these numbers, right? So if somebody is biologically a man but lives as a woman, for example, what does that do to underwriting? Which category do they fall into actuarially? It makes things a little more complicated for them. But of course, as always, the insurance industry will figure it out, and they will go through, ask questions that they need to ask, find out what they need to find out, and they will make, hopefully, the right underwriting decision to be able to get you a fair product. There you have it. Max, thanks for the question, and I will try and squeeze in one more before our break. This is about flood insurance. Let me read this. I just found out my property is in a newly designated flood zone. How can I be sure I'm protected? Well, that's an easy one. Buy flood insurance. Bump. Yes, flood insurance is going to pay. I think we talked about that earlier today as well. Flood insurance is offered through FEMA, through the National Flood Insurance Program, and it's also offered through individual private insurance companies that offer flood damage coverage. It is not NOT, covered on your homeowner's insurance policy. Don't look for it there. It's not there. Flood insurance policy. Got it? Good enough. We're going to take our last break for the day. This is Insurance Hour. I am Karl Susman, loving our chat. Give me 60 seconds. We'll do it some more. Stand by.
Are you feeling lost in the search for the right insurance? Making call after call, only to find no one willing to go that extra mile for you? At Susman Insurance Agency, we understand that frustration, and we're here to change your experience. Where others see obstacles, we see opportunities. While many might shy away from jumping through hoops, at Susman Insurance Agency, we are prepared to leap, looking under every rock, exploring every avenue. That's not just what we do, it's who we are. Our dedicated team doesn't just offer policies, we provide solutions. Solutions born from persistence, expertise, and a genuine commitment to finding you the best coverage possible. We don't just meet expectations, we surpass them. If you're tired of hearing no or it's not possible, it's time to turn to a team that believes in yes, and let's make it happen. Don't settle for less. Reach out to Susman Insurance Agency at 877-411-5200. Visit us online at sussmaninsurance.com or email sales@sussmaninsurance.com. Let's uncover the insurance solutions you deserve. Susman Insurance Agency, going the extra mile every time.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here and listening and watching and learning about my favorite topic, insurance. I'm hopeful that you are gaining a lot of good information from this show because, again, things are not as easy as they used to be. It sounds so cliche, but your insurance policy is more complicated than it was 10 years ago, certainly 20 years ago. Anything over that, forget about it. So, if you have been purchasing insurance or are in the future, there is information here that you need to know. Seriously. Let's get back to it. The phone lines are still open if you have specific questions for me. Go ahead and give me a call or shoot a text to 559-656-0317. Or you can email me your question to questions@insurancehour.com. All right, let's get back to it. This is from Cody. Cody is saying, is water coverage covering sub-pump issues? I'm going to try and extrapolate from that a little bit. I think what is being asked is there coverage if your sub-pump overflows or doesn't work or something like that? For those of you that don't know, some areas the water table is higher than in others. Or certain areas simply, the way the ground is, they get saturated when it rains very hard. And so people will actually have special drains that are dug and a machine, it's literally a pump. And the pump sits underground and it has one of those little flaps, kind of like the toilet does, with a little floaty on it. And when it fills up with water, the floaty goes up and it turns on the pump and it starts pumping the water through the pipes and out away from the property. So I think what's being asked here is if that fails, is there going to be coverage? I think. And the answer is going to be it depends, because as happens sometimes in the insurance world, it's not just a matter of what causes the loss, it's what the loss is. If we're looking, for example, at a loss that is looking like rising water, that would need to be covered under a flood insurance policy. If the damage that we're looking at tends to be because a pipe broke and water started coming in, that might be something that's covered under a homeowner's insurance policy. Let me make it even more complicated. If it's a machine that breaks down like the sub pump, some policies will have coverage for mechanical breakdown. So it's a great big depends on that one. I wish I could give you more information about that, but unfortunately, it's just one of those things that is going to be so, case specific. I don't want to lead you astray, but I just be aware that there are different places that you might be able to obtain coverage for something like this. Talk to a sharp agent or broker, tell them your situation, and get the answers that you need. Next one, Carl, I'm renting an off-campus apartment. Is renter's insurance absolutely necessary for students, or is it just nice to have? It's funny. I read that and I'm thinking, college student. And of course, I'm thinking about a young person, but that's not even the case these days, right? I mean, people go back to school to get degrees all the time. You're not just in a situation where you have people going from high school to college. You have people that go from high school to college, of course, but there is also plenty of people out there that go back to school. Oh, that reminds me. You ever see the movie with Rodney Dangerfield, Back to School? Oh, that is a hoot. That is a hoot. Boy, this seems like movie trivia night, right? Yes, if you haven't seen Back to School with Rodney Dangerfield, go and see it. But to answer your question, you want to have renter's insurance if you're renting anywhere. If you're renting off campus, yes, you are renting, you should have it. You're renting on campus, yes, you're renting, you should have it. Renter's insurance, and I know we talked about this today, is probably overlooked a lot more than it should be. Now, you might say, well, what in the world do I need it for? I don't have that much stuff here. Well, as we mentioned earlier, renter's insurance is not just about the stuff. There's also liability coverage that can come into play there as well. All right, so yes, renter's insurance, whether you are on campus or off campus, if you are renting, if somewhere in the question is renting, then the answer more than likely is going to be renter's insurance. Next question. Hi, Carl. My driving record isn't great. What's considered high-risk auto insurance, and how can I bring my rates down over time? Well, this is a tough one as well, because this is going to be very, very state-specific. Plus, when you say high risk and not great, what does that mean? What is a high-risk auto policy to me might be different than it is to you. What is not great for a driving record, that again might be very different for me and versus what you might think. But the good news is insurance companies as well have different definitions for that. So here's my best advice. If you are having problems obtaining auto insurance because of your driving record, I think that's safe to say you probably have been, we don't call them bad drivers, we call them unlucky drivers. Then you've probably been an unlucky driver. And if you've been an unlucky driver, that means you need to usually go out and find an insurance company that specializes in unlucky drivers, in people that have had multiple tickets or accidents or suspensions or whatever the case may be. Some carriers specialize in that. They compete to have that type of business. So you might be with a company that's a company that specializes in clean driving records, never had a ticket, never had an accident. So when you get a ticket or several tickets or a few accidents and your rates go crazy, you're going, oh my God, the last thing I want to do is try and find another insurance company. But if you actually go out and look for an insurance company that specifically works in that market, they play in that sandbox with unlucky drivers, you might actually be able to find that you can save money with them versus staying with the carrier that you're with that doesn't have pricing for drivers like that. As far as how can you lower your price over time, anyone want to shout this one out for me? Yeah, drive safer. Stop having the tickets, stop getting into the accidents, and whatever you do, if there's a small claim, there's a small accident, and it's something that's below your deductible, unless you are financially responsible and required to by law, that might be something you want to handle privately versus adding to your already high-risk auto record. And with that, I will say thank you for listening and watching. This is Insurance Hour. I'm your host, Karl Susman. We will be back next week. Thank you so much for being here. I do want to thank all of you for taking the time to listen today. I know insurance is not necessarily the most sexy concept. It is important that you understand what it is you're looking for, what it is you think you're getting, and finally, what you actually did purchase. You simply need to know more than you used to. Things are more complicated. If you have any questions, please reach out to me directly at 559-656-0317. You may also send your questions to questions@insurancehour.com. Informing, educating, and entertaining, one policy at a time, this is Insurance Hour. The show is dedicated to Shamrock Papa.